Hello traders, Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Tuesday, 15th day of July 2025, and this is the evening report for gold and silver. Today, the U.S. Bureau of Labor Statistics released the most recent inflationary data vis-a-vis the Consumer Price Index report for June. The report showed a 0.3% monthly increase in the CPI, putting the 12-month inflation rate at 2.7%. Core inflation, which excludes food and energy, also rose, but only by 0.2% on the month, with an annual rate moving up to 2.9%. Gold prices declined now for a second day in a row. Today, August gold gave up $21.60. That's a total decline of 0.64%, taking a troy ounce to $3,330.50. Gold has now begun trading in Australia, up $2.40 from the New York close at $3,332.60. Following the release of today's CPI report, the dollar did strengthen by 0.52%, taking the index to 98.629, roughly the same amount of today's decline in gold pricing. Silver declined today by 42.5 cents. That is a drawdown of 1.11%, taking the most active contract to $37.98.5 cents. The decline in gold today did cause some technical chart damage as gold opened above but closed below its simple 50-day moving average, which is currently fixed at $3,344. The break below the simple 50-day moving average on a technical basis does signal the potential for a further price decline. If gold continues to decline, $3,310 would be the first level that we would look at for potential support. It is the closing price of Tuesday, July the 8th, as well as the opening price of the following day, Wednesday, July the 9th. With the next level of support at $3,285 and major technical support at $3,253, the low that occurred on Monday, the 30th day of June. However, if gold does fall, I would not expect gold to drop as low as $3,250, as we have identified a compression triangle, and I would expect support to show up somewhere around $3,280 and above should gold continue to drop. I have just added the 20-day simple moving average, and as you can see, that is fixed almost exactly at the same level as the 50-day simple moving average. A cross of the 20-day moving average below the 50-day moving average would be yet another sign that we could see gold continue to drop. However, if we look at recent activity in which we've seen gold decline, for example, on Thursday the 26th and Friday the 27th, we had a 2-day drop. The next drop that came in was a 3-day drop, although the center day was a doji. Typically, we have been getting slight 2-day drops rather than a defined multi-day correction as we did at the beginning of this sell-off. So I would look to see if gold can find support, and if that happens, we want to see gold trade back above this upper level resistance line. If that occurs, this resistance line would then be a support line. Inasmuch as fundamental events such as tariffs and other economic policies that this administration has put into play have had an impact on gold, it has been primarily dollar strength that has limited gold's rise. When it moved higher, a 0.52% gain in the dollar today is substantial. When we look at recent history, over the last 10 trading days, you can see that there was only one other day, Monday, the 7th day of July, 0.56%. On all of the other instances, those gains were more like 0.2 to 0.3%. That being said, dollar strength has defined the upside moves that we saw 3, 4, and 5 days ago when gold was rising. Lastly, as you know, we've identified that gold has been trading with a series of lower highs and higher lows, creating this compression triangle, which makes the probability of a steep decline much less likely than gold declining up to about $3,320 and then moving back up with resistance based upon this upper level resistance trend line. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next evening report. Bye-bye.